We handle most of the things that come after bookkeeping, accounting, and controller work. Those things are concerned with where you've been. Our CFOs are helping that business owner with future-facing strategies, models, cash flow to say, okay, this is where I want to go. Great. So here's a couple options on how you can do that. Which one do you want to go with?
Hello, everybody, and welcome to the Partners and Pours podcast, an Exit Is Now production. I am Josh Koza, the Director of Strategic Relationships here at the Exit Planning Institute and host of the show. And today I'm lucky enough to be joined by really a friend of ours, an advisor to us, a longtime CEPA and a partner, Darren Cherry. And I want to get into a little bit more about Darren in just a second. But for those of you maybe new listening to this, just a little bit about the purpose of this. So at the Exit Planning Institute, we have a number of different partner organizations that we work with, and all of those organizations are built to provide a solution, a service, something complementary to what you or many of you do out in the community. And we want to use this platform as an opportunity to showcase that out to all of you, whether you're a CEPA or not, and help you understand who these partners are, the value they provide to the community, maybe the seat they fill at that exit planning advisory table, and help you understand how to identify opportunities that might be the right fit for them and where they might be the right partner for you on a business owner engagement. So with that, I want to get started here. And Darren, thanks so much for making the trip up. Long drive, a couple hours up 71, but I appreciate making the trip up from Columbus.
No worries, Josh. I'm glad to be here. So
this is excellent. And we've spent the day together and learned quite a bit myself about FocusCFO, certainly, and throughout the conversation. But one of the things I like to do before the podcast is Google the organization's name. I'm always interested in what like the formal Google definition would be when it pops up. So I don't know if you know this is exactly what it says, but the first thing that pops up under the FocusCFO banner is we built FocusCFO to offer a solution. Our fractional CFOs embed themselves in your business and develop financial strategies and roadmaps to guide you and then it runs out of space, ... So that's like the formal Google definition. I guess in your own words, can you talk about who FocusCFO is?
absolutely. Thanks for asking, Josh. The Google definition is directionally correct. But to be a little bit more specific, we serve that lower middle market. So our sweet spot are customers with revenues between $2 million and $50 million. Now, we can cover anywhere. We have clients that cover a broad spectrum of pre-revenue all the way up to $100 million. But our sweet spot is that $2 to $50 million. Owners come to us in three stages of their journey. We started out in 2001 as primarily a turnaround firm. So business owners come to us when they're unhealthy and they're looking for assistance to kind of right that ship. The next phase is, as you might imagine, is when they're growing. And oftentimes they're growing really, really, really fast. And they come to us to help them with their infrastructure, their architecture, and most importantly, their forward-looking strategies. I like to compare us to the business owner has a current state, and they have aspirations. So we really are working with them to try to help them close that gap between those two. The third stage where clients will come to us is either when they're acquiring firms or when they're preparing their business for an eventual transition. Doesn't necessarily mean it's a third-party exit. It could be a transition to a family member. It could be a transition to an employee stock ownership program. But they're making some kind of transition where the owner gets an opportunity to move to their next chapter.
Excellent. Thanks, Darren. And so you just talked about three I guess, different stages that you might engage with an owner there. And we talked a little bit about this earlier, but could you describe maybe a scenario where it isn't the right fit? Like you have conversations with the owner, like, hey, we're not needed if it's this kind of mindset maybe of the owner.
Yeah. So there's a couple things. First and foremost, the way we're set up is we're working with the client 1 or 2 times a week primarily. And we handle most of the things that come after bookkeeping, accounting, and controller work. Those things are concerned with where you've been. Our CFOs are helping that business owner with future-facing strategies, models, cash flow to say, okay, this is where I want to go. Great. So here's a couple options on how you can do that. Which one do you want to go with? And so it's more of a forward-looking, first and foremost. And then the owner kind of has to have this burning desire to improve or to transform. And that's where we are able to give them the greatest value.
Okay. And when you do engage with a business owner, obviously a lot goes in it. When you have an engagement between an advisor and an owner, a lot goes into the fit between an individual, whether it's a fractional CFO or it's a business consultant, accountant, whomever. Can you talk a little bit about the process you go through when you're pairing a prospective client with one of your CFOs?
It's magic, man. Come on.
Right. A little bit of the secret sauce, I guess.
Absolutely. So, what we try to do is there's clearly some industries where it really is necessary to match the CFO that has a background in that industry. But for the most part, we're helping the business owner with systems, processes, and financial modeling and forecasting. Really doesn't matter what business you're in, So what we tend to try to do is just make sure the CFO is a great fit for the business owner, because that CFO is going to not only work with the business owner, but they're also going to work with the management team, and so it's about the fit, and it's also about what type of business are they? What stage are they in? There's the turnaround, which may have certain types of CFO, and then there is the really, really high growth kind of businesses that may have other CFOs that are more ideally suited for it. But it really is about the fit with the owner, the team, and the condition that the company is in at the time.
And that's something I think that sounds like it might be unique to FocusCFO, maybe as compared to some other organizations, is the time spent on that. And some of that goes back to the, I don't know if hierarchy is the right term, but like the roles and defined roles and responsibilities between a CFO and someone like yourself as an area president. Right?
Absolutely. The great thing that is a bit of a differentiator is we sort of separate that content delivery from business development. So a CFO is focused primarily on delivering value, servicing the client. And the area presidents have the role of doing the business development. So for the CFOs, it typically results in a faster onboarding of clients and less of the troughs that are associated when you have a client turnover.
And one of the challenges we talked about today was maybe in the more immediate market where you said maybe it's going to get harder before it gets easier is the adoption or consultants to maybe accountants, you said, or saying they should add some sort of CFO services. Can you talk a little bit about what you're seeing?
So, and I should probably back up and continue on. So a client gets both an area president and a CFO. So they get two for one. And our CFOs have been CFOs. And in some cases, they've been COOs. In some cases, they've been CEOs or entrepreneurs. So they are experienced at C-suite level work and delivery. One of the trends that's happening now is there are a lot of consultants that are advising CPA firms and even bookkeeping firms to say, hey, what you really ought to do is step up and deliver CFO services. Now, the challenge with that is they've never been a CFO. So how do you deliver services, experience level service, when it's something that you've never done? And that's the challenge, and that's the thing we have to watch out for. And so I always tell folks when they're talking to other people, get a feeling for how much time they've spent being a CFO and what type of organization was it.
Thank you. Yeah, and that's helpful. And I think I talked about differentiation and having the area president focused on business development and the CFO focused on the CFO, the content delivery. One of the things I think is unique about you as well is about FocusCFO is the number of CEPA certified CFOs that you have within the organization and the integration, I guess, of the value acceleration methodology into, at least in part, your processes where we don't maybe see that at other organizations. Can you talk about maybe the impact that's had or maybe the decision behind that going that direction?
Yeah, so we do have probably a little bit more than 45 CEPAs of our 180 CFOs. The thing that makes us unique is we're embedded with the management team and the ownership. We have a weekly touch point. And so our CFOs have great insight on how fast a business should be moving on implementing whatever it is. It could be strategy, it could be the findings from an exit plan. But they're in a unique position to say two things. How fast? Is it too much? Could they move faster? But most importantly, they can also identify and say, hey, wait a minute. The team doesn't have the skill sets they need in this area. It could be marketing, it could be sales, it could even be leadership development, leadership productivity. So what we get is a faster implementation, a better quality of an implementation by using this model. So they get the CFO that's there weekly, they get an exit advisor that's going to be with them at least once or twice a month. And so the process moves with traction.
I want to talk a little bit about ideal client profile. So you talked about lower middle market, so businesses between, as you define it, between $2 and $50 million. Is there anything further qualifications you're looking for as far as, I mean, you talked about some of the industries. So are you industry agnostic? What about geography? Like what markets are you serving? Is there anywhere you're not serving? What's the sweet spot for you in each of those?
Yeah, that's a great question, and it's a multifaceted one. So unpacking that would first and foremost say, yeah, lower middle market is that space that we're in. Geography isn't as important. We have two models, and from that probably could be a couple other ones. But our core business is on-site CFOs. But we also have virtual CFOs. So it may not matter where the person is located in terms of if we have, as you would call it, boots on the street sort of CFOs there. The owner itself, kind of qualifying issue is that the owner must want their business to change, transform, improve, or grow. And I'd almost say they need to have a burning desire to do that. That's first and foremost, because if they don't really do that, if they're looking to kind of stay where they are, then they don't really need a strategic CFO. The other thing is it's a give-take process. And so it's a learn, do, And the owner and his team have to have a bit of a coachability factor in terms of that. It's okay to be the smartest guy in the room. We know you're the smartest guy in the room, but are you willing to consider some other options? And those are the two most important factors.
And we talked about this earlier, specifically as a CEPA and the Find a CEPA resource directory, because we encourage advisors to go to that directory to find complementary partners or advisors they might need for their team, but it isn't necessarily just tied to where they're located. So I did want to just call that out, that you said it's not tied to a specific geography per se. So if there is a good fit, to have the conversation, make the introduction regardless.
Most definitely.
Now, there's instances where an organization might have a CFO in place, but you get brought in anyway, right? Can you talk a little bit about what that?
Do I really have to? No. So if you think about it, not all CFOs have experience with some of the strategic activities such as M&A. So they may be doing an acquisition and they say, hey, we need a little bit of help on our team, helping with making sure we're doing the right thing as we go through this process of acquiring a firm, and also with the integration of it. And in some cases, there could be someone with that title that may have some blind spots that they need help with. And so as you go through and grow faster, you want to use a combination of your cash flow and external cash flows so that you have that proper balance. And some of the relationships with banks and attorneys are things that some CFOs don't have a lot of experience with, and that's where we can help with.
Sure.
And in a third case, then maybe they have a CFO that is a little young, and they need someone to kind of coach and mentor them for a couple years.
Sure. Yeah, and it certainly wasn't meant to discount the abilities of the CFOs in place, but I just want to paint the picture for anyone listening that just because you see a CFO in a company hierarchy when you engage with an owner doesn't mean that there's no services or value that you can provide or may need to provide in that scenario. Any other signs or questions or maybe flags that an advisor who's maybe doing a triggering event with a business owner or engaged in conversations, like things that they should say that should pop up and, this probably calls for an introduction to FocusCFO. Like what types of things should they be on the lookout for that would be
So,
qualifiers?
The most common one that comes to everyone's mind is when a business is struggling with cash flow. That's pretty common. But some of the less common ones is when the business is on this hunt to find a new bank. And in many cases, the desire to find a new bank has more to do with how cash flow is being managed per se than the service of the banks. Now, there are some businesses that grow and need more services that their current bank doesn't offer, right? Another one is when the team is struggling to accomplish their goals. They have an accountability problem. So they need someone to help them tear the goals down into more manageable pieces and coach them through that process of execution there.
And then would you say in your engagements, we talk, maybe didn't spend as much time today talking about on the podcast, but like referrals, getting referred in, but reciprocal referrals. So when you get into an organization, embed yourself in an organization, that's got to uncover opportunities where, and I think you mentioned this a few minutes ago, where maybe their sales strategy isn't up to snuff, or they need help on the sales execution side. So it sounds like your role in there uncovers kind of reciprocal or referral opportunities out to other advisor types to bring into that business owner. Would you say, is that fair to say?
Absolutely. Even when we do that initial business assessment, we're kind of telling them, hey, based on what we're finding today, this may change, but here's a rough budget of some of the other services you'll need. They could be marketing. They could be sales consulting. They could be management leadership consulting. Or it could be some of the standards. Maybe they have an attorney that is really just a business attorney, and they're going to need some transaction attorney. They may need a state attorney. Maybe they don't have the right CPA to help them efficiently manage and plan their taxes. And so there's a wealth of other services the business owner may be able to benefit from that we'll be sure to bring up.
Okay. Excellent. Well, I think that about covers everything I wanted to talk about. Any closing thoughts or words for the EPI community in summary of?
Absolutely. You know, the thing I tell everyone in the community is when a situation comes up, it just doesn't hurt to ask. We can give you our thoughts on what makes sense, where we can best add value, and where maybe someone else should.
Sure. Well, it sounds like they should reach out, make a phone call, and have the conversation.
There you go.
So, well, thanks, Darren, again, so much for making the trip up today. We've really enjoyed our time together and for coming on the podcast here. Want to thank everyone for listening in today. I want to encourage you to subscribe, listen, and leave a review on all your podcast platforms, and we look forward to seeing you on a future episode. Thanks, everyone.